And your first question comes from the line of Bill Peterson from JP Morgan. Your line is open.
Good morning. This is Mahima Kakani on for Bill Peterson. Thanks for taking our questions. Can you tell us a little bit more? Hi there. Could you please tell us a little bit more about if the Hyliion collaboration could potentially change the timing between the KARNO and the fuel cell launches and/or the key markets addressed?
Sure, absolutely. So, first coming to market is going to be the Hypertruck ERX, which is the CNG range extender solution. In parallel, as you know, we're already working on the KARNO development vehicle. That will be first showcased out at the ACT Expo here in just a couple of months. And then, as we announced today, we're going to start working on a fuel cell development vehicle as well. So in terms of timing of those solutions, the one advantage that a fuel cell solution does have is just it's less regulatory compliances that we need to go through in order to bring that to market. So there is some acceleration of the development schedule there. In terms of actual timing of when we'd be ready to bring that to market, we're not ready to share yet just because the agreement with Hyliion is really around this initial development vehicle, proving that out, showing to the market that our powertrain is able to incorporate a fuel cell just like it can incorporate the range extender CNG, the KARNO generator. And then from there, we'll showcase the solution with customers and we'll work with Hyliion to determine how we see best fit to potentially bring a solution to market and what the timing of that would be. So, more to come on that end, but, as your question is pointing out, there are, easier, or I should say less barriers to bring a fuel cell solution to market just because of the regulatory side of things and the zero tailpipe emissions. But by all means, the team's focused on ERX is the first one we're bringing to market, and that'll be in start of production later this year.
Got it. Thanks for that color. And then maybe as a follow-up to that, is the Hyliion collaboration, let's say that the proof of concept kind of meets your expectations, will that be the primary fuel cell strategy forward, or is it part of a larger hydrogen strategy from Hyliion?
Yeah, so as I think we've probably been, pretty bullish on is, we see hydrogen as being a fuel of the future, but the biggest question is just when, right? And, even where we sit here today, hydrogen costs are still much, much higher than diesel even. There's only a few stations out there where you can actually refuel a hydrogen vehicle, a semi-truck. So from that standpoint, we really see hydrogen as being kind of a localized delivery, and we expect there to be, interest from fleets and demand from fleets in those areas. But for the real, vast majority of the country, over-the-road trucking, we definitely see natural gas and renewable natural gas, especially, as being the fuel of choice. So we've gotten, as a company, we've gotten some question marks or maybe even criticism in the past of are we going to be ready when, hydrogen is available? Are we going to be a true contender at that point? And that's one of the reasons why, we wanted to make sure we fulfilled the roadmap that we had, the 3-stage roadmap of including a fuel cell as well, because we want to show that whenever hydrogen is ready, when those costs come down, when infrastructure gets built out, we're going to be able to have a solution that is piggybacking on a powertrain that, by that time, we expect will already have millions and millions of miles proven out with the CNG range extender. And so, we want to showcase that we're going to be a strong contender in the hydrogen space as well.
Thank you. Really appreciate it.
Your next question comes from the line of Andres Sheppard from Cantor Fitzgerald. Your line is open.
Thank you. Hey, Thomas. Congrats on the quarter, and thanks for taking our questions. Quick question on our end, a bit on the quantitative side. As you approach start of production second half of this year, you have the 210 orders, which was increased from last quarter. How should we be thinking about gross margins? Now, I know you don't guide those, but, should we expect those margins to perhaps turn positive by the end of this year, or are we more realistically, should we be envisioning, 2024 as a more feasible timeline? Thank you.
Hi, Andres. This is John Panzer. I'll take that question. So we mentioned that we're going to be commercializing the truck later this year, so we're going to start making deliveries sometime in the fourth quarter. We don't know exactly what date or how many. So I wouldn't assume in 2023 that we would see positive margins. As we mentioned, there's some inefficiencies with starting out, and component costs are higher when you're purchasing them in lower volumes. But we're actively working to turn those positive, and that's going to be from more efficient assembly, better procurement, and also just engineering changes to the truck. So it's a little bit too early to predict, but you can be sure that's our besides delivering a reliable truck, that's our number one priority for the future. So it's a little bit hard to predict exactly when that will be.
Understood. Thank you, John. That's helpful. Maybe as a follow-up, I'm curious, maybe Thomas, maybe this one a little bit more for you, is what kind of trends have you been seeing on the supply side, right? Obviously, supply chain disruptions has been a big problem for the entire industry. Just curious what you've been seeing and, maybe any thoughts for 2023. Thank you.
So we're definitely seeing the hurdles that were in place of the supply chain markets over the past couple of years. We're definitely seeing those easing some. We're not seeing suppliers continue to extend their lead times. If anything, it's starting to go the other way of they're achieving the lead times they told us, and in some instances, moving in the lead time. So I think everything's heading in the right direction of the supply chain markets. The next thing that we hope to see, and we're going to obviously push on this with our supply base, is to start to see the pricing reduced back to where it was, or start to head towards the levels it was pre this kind of shake up in the supply market. So that'll be one of our big pushes here. One of the things, maybe just to parlay this question into another topic, is just we're starting to see BEV vehicles get out into the market, get out into customers' hands, and the question is, where is the customer demand going to lie? And what's been interesting, and we've kind of forecasted this a little bit in the past, is we're seeing that fleets are really struggling with these BEV vehicles. They're seeing charging as being a massive issue, the cost of infrastructure, the uptime of the vehicle, the amount of time that it spends having to be recharged. All these things are just factors that are really hurting fleets' abilities to adopt the BEV solution, which is then in return actually causing more demand and more focus on our solutions, which is great. And just to put an actual story to that, we were with a fleet not too long ago who did adopt some BEV vehicles, some plug-in vehicles. And the very senior executive there came back to us, and their comment was, after their experience with BEVs, while he's at the company, they will never adopt another BEV vehicle again into their operations, just because of how many hurdles and headaches they had with trying to adopt a BEV. But they see our solution as being very practical. So that's some positive news for the path we're on, most definitely.
Appreciate that context, Thomas. Very helpful. Maybe one last one, if I could squeeze it in. It's just remind us again on your capital needs, kind of what your expectation is there. Obviously funded through start of production, but any additional color there?
Yeah, this is John again. I'll summarize that. So we finished the year with $422 million of liquid assets on our balance sheet, so capital that will be available to us when we need it. And we spent, I think it was roughly $135 million last year. We also guided to spending somewhere under $200 million this year. The unknowns there is just our working capital build and how many trucks we sell by the end of the year. So somewhere south of $200 million. So that's going to leave us over $200 million by the end of this year is our projection. So that that leaves us in good shape. So we have no plans to raise any capital all this year, and it puts us in a great position to even start 2024 as we start to ramp up sales.
Excellent. Thank you very much. Congrats again on the quarter. I'll pass it on. Thank you.
Thank you.
Your next question comes from a line of Donovan Schafer from Northland Capital Markets. Your line is open.
Hey guys, thanks for taking the questions. I do want to start off just actually by offering my condolences around Ed's passing. I know he was an early investor in the firm. I think he even had sort of like a COO role for some stretch of time, and I think it goes back to like 2016 or something. I know he was there for a long time. So no doubt, I'm sure that he will be missed. So, just wanted to, pause and
Appreciate that, Donovan. Thank you.
Yeah. So turning to questions, for the Hypertruck ERX ramp, you guys hinted on talked about some of this with like working capital and supply chain and sourcing and all that. But, of course, I think we would all love to know and have a crystal ball for exactly what the Hypertruck ERX ramp will look like in 2024, following the initial 200 or 210 units, thinking about, second quarter, third quarter, fourth quarter of 2024. I'm guessing it's far too early for you guys to give us anything on that. Of course, if you can, please do. But if not, what I'd like to know is at what point do you need to start, making procurement decisions? When procurement decisions and other things, like when do you need to have your own internal view in place for the number of units, you would need to be able to produce in Q2, Q3, and so forth? What's the gating point or the point this year where you would need to start making some of those decisions?
Sure. So, as you led in with the question, it kind of hinted to, we're not ready to share just volume expectations for 2024 at this point. We are confident and are going to work very hard to make sure we achieve what we set out of delivering all those 200 vehicles by the end of Q1 of 24, which is going to be a great ramp up for the team. But, in terms of, the procurement part of it that you mentioned, it's a great question because as we shared in past earnings calls, we were starting to pre-buy some of the things for these initial 200 trucks just to make sure that we had them in plenty of time. Supply chain markets, it varies based on components, but usually probably 6 months is a fair bet. Some components are longer than that. Some are much shorter than that in terms of when we would need to be placing orders. So, but for kind of analysis purpose, I would use kind of that 6-month mark of when we would need to be placing orders before actually making the deliveries with the customers. We're obviously working very closely with Peterbilt and working through the availability of trucks, and we feel confident for those initial 200 builds. We're in good shape there. And one thing to highlight on that end, just the Peterbilt relationship is going well. We continue to make great progress with them. And actually, one of the big milestones for the team internally here was just recently we did the first build of a decontented truck off of Peterbilt's line that was spec'd specifically for Hyliion. So as we've talked about in the past, in the early stages here, we were kind of taking full trucks and we were taking components off of them and then having to discard those or sell those components. Now we're moving forward with being able to source chassis and trucks directly from Peterbilt that are built how we need them to be, which is a huge milestone. And we expect that relationship to continue to grow as we move forward here.
Okay, thank you. That's very helpful. And then for the winter testing, given that you've already begun the winter testing, I'm sure it's not complete, or you would have said it was finished. And I'm sure that some amount of assessment has to have this full start to finish scope for an assessment. But I'm curious if there are various incremental phases for the winter testing or any discrete points where it allows you to give us some color or some updates on how the vehicles have been performing so far in the winter testing, and also maybe any new insights from that versus the summer testing. I know, like you talked about frustrations with BEVs, in cold weather. You consume a lot of energy with heating, the cab, but with something like a natural gas generator, you get waste heat from that. So that's why heating isn't really a problem in an internal combustion engine. So curious, comparing and contrasting winter, summer testing, benefits, and just any incremental updates from what you're seeing so far.
Absolutely. So a few different parts to that question. So I'll start off with, is it still ongoing? So yes, it is. Actually, we're still in the middle of winter testing right now, and we're going to continue it on. Actually, we just have made some design improvements to the vehicle. The next batch of vehicles are just starting to hit the road. Actually, as we were getting ready for this call, we noticed that there's already been some pictures of the truck out on the road, the new design, the updated design. So we're excited to have that already underway. But testing will continue. In terms of what we've learned thus far, there have been learnings, right? The philosophy with testing is you want to push things to the point that you break them, so you figure out where the weak points are. So we're doing just that. But what I will say is nothing that we found in testing thus far has made us have to go back and rethink the timeline that we're on. So that's a huge win. But the learnings have been learned anywhere from water ingress areas, things like that to improve, connectors to improve, designs of sheet metal to improve. Nothing that's major though, as well as we've even had learnings on some of the components that we're sourcing from, whether they're brand new or newer companies in the industry to well-established, been around for a bunch of years, but they're new into the electrification space. We've been able to give feedback to those suppliers as well and help them through continuing to iterate the designs of their components. But and then the last part of your question was kind of summer versus winter. I think winter is normally thought of as being, very, very difficult for electric vehicles, and it is because you need to use a lot of your battery capacity to actually heat the batteries because batteries don't like to be cold. One to help with powering the vehicle, and thus, we don't see as much of the negative performance attributes of cold weather. It doesn't affect our powertrain as much as it does a BEV. So overall, been very pleased with the testing, though.
Okay, and then if I could just squeeze one last question in about kind of, there's originally there's sort of the 200 production slots for the Founders program tied to the launch facility in Dallas. And now you've got the incremental 10 units ordered by DSV. Is that, as we get incremental orders and things that come in, so we add on to that initial 200, are those going to be folded into that same idea of like a Founders program and they get that kind of, white glove treatment you talked about with additional servicing and monitoring and everything out of the Dallas facility? I think you kind of hinted at that in your prepared remarks, but just wanted to clarify how to think about incremental orders in relation to the initial 200 that were kind of highlighted as this Founders program.
Sure. So, we anticipated the Founders to be those initial 200, and we worked with the fleets to, make sure that those vehicles were going to be coming through Dallas and using the launch facility. Coincidentally, with DSV, the area that they're going to be operating these vehicles is out of Dallas as well. So, we're going to use the launch facility to assist with their vehicles in addition. But as we go forward, we plan to loosen that constraint of wanting to make sure the fleets are going to be coming through Dallas and really just make it a solution that's available across the country. Obviously, if a fleet's coming through Dallas, then we're going to use that launch facility. And just to put some more color there, we are still in the process of identifying where that facility is exactly going to be located, where in Dallas. We're also exploring, fueling options, having fueling on site versus potentially just having a fueling station nearby that the trucks can fuel up at. So we're on a good trajectory to have all of that complete by later this year when we launch the vehicle, and we'll be supporting those initial ones or other fleets that are in the Dallas area out of that location.
Okay, so when you talk about potentially doing that service, elsewhere as you expand, in other markets. So then the idea is this type of white glove, talking about like a white glove service. That's a service you would actually intend to have available. It's not something where it was just, oh, here's the first 200. We want to really make this a flawless, perfect thing and all the learnings and everything involved. So it's just white glove for the first 200. That's something you at least want to have available as an option going forward and in other markets. Is that correct?
So maybe just to try to put a little more color to it of how we were thinking about it. So for the first 200, we're approaching it where it's critical that we get as much learnings off of these initial vehicles as possible to make sure that the design is robust, there are no failure points that we see coming up. So, what we've asked the fleets is, even if the vehicle is working perfectly fine, they aren't experiencing any issue, we still want to get eyes on the truck to make sure that it's working as we would expect it would, and we don't visually see anything. Obviously, we're going to be tracking the data 24/7, but so that's kind of the agreement we have with those initial 200 trucks. As we go past that, the goal would be that we're only going to be getting eyes on the vehicle if there's a routine maintenance that's scheduled, or if there was an issue on the vehicle. And so maybe that's more the difference of kind of the white glove is us kind of creating an arrangement with the fleet where we're maybe more involved than we normally would be once it's into normal volume production, versus after the 200, we want the fleets to use it like they would any other technology that's on the truck.
Okay, thank you. That's very, very helpful. I'll take the rest of my questions offline.
Thanks, Donovan.
And again, if you would like to ask a question, please press star 1 on your telephone keypad. Your next question comes from a line of Avi Jaroslawicz from UBS. Your line is open.
Hey, good morning, guys. Avi on for Steve Fisher. So, John, I think a couple of questions on OpEx for this year. So one is just how should we be thinking about SG&A for this year? I know expected to be leveling off, but does that mean kind of flat with last year, or increasing for some part of the year and then flattening out from there? And then also, in terms of the R&D expenses, can you maybe bucket, how much of the R&D is geared towards commercialization this year versus development of future products?
Sure. So first of all, in the SG&A, the guidance there was really just to indicate that on the SG&A side, the administrative side of the company, we're starting to kind of reach maturity and where we don't need to build a lot larger organization. And so, to your question, it's I don't want to split hairs here, but we just see it kind of leveling out. You might look at more fourth quarter and just say, hey, that's give or take a number like that. Of course, it grew a little bit. It looks like it grew a little bit less than 10% last year. So that fourth quarter might be a good point to just look at. So I don't want to overplay it, because we could see opportunities to expand or grow, but we just don't see that right now. And again, it's a way of just saying, hey, we're focused on R&D, we're focused on the product versus the administrative side. And then on R&D, we're shifting over. There are from R&D to testing and certification, and then into commercialization support, the activities that Thomas was talking about, in terms of just making sure we have a good product that we can support in the field. We are shifting over, starting to shift some of that R&D into the Hyliion project, certainly over to Carno, and some other things, other products and opportunities that we'll talk more about when we get to our investor conference later in the year. So, it's going to start to shift. There's not a lot of value in trying to parse it out too finely, but we are definitely starting to shift into newer things and exciting things as we get to the commercialization point on the truck.
Got it. Appreciate those. And then Thomas, so in terms of the strategy for the fuel cells, can you explain why the fuel cells are better to use than the Carno generator? I know that you mentioned in terms of the regulations, no tailpipe emissions, but the Carno generator seems like it shouldn't really be emitting a whole lot. I know we discussed some of the tech behind it. So just trying to understand the advantages of the fuel cell versus the Carno generator.
Sure. So on the fuel cell side, you hit the nail on the head. It's a zero tailpipe. It only runs on hydrogen. Versus Carno brings forward this opportunity that it's fuel agnostic. So it can run on natural gas. It can also run on hydrogen. When it is running on natural gas, you do have tailpipe emissions, but we're seeing that they are significantly better than the NOx emissions that a internal combustion engine would be producing. Similarly, on hydrogen, you are going to have a very, very micro amount of emissions, but you know, you do still have a tailpipe coming out of it. So in terms of efficiencies, though, we actually expect that the Carno is going to pull forward better efficiencies than a fuel cell. So I think, you know, what we're going to see is likely for some of these areas where the stations are already built out, we are going to see some fuel cell adoption. Hyliion already has a customer base that they're working with. We'll work with Hyliion and going and seeing customers presenting this solution. And we do expect that we will have interest on the fuel cell. But then as we look at, you know, kind of more of the over-the-road long-haul trucking, we think Carno is what is going to be chosen by fleets because they could have a solution that's really future-proofed, right? You could use it for natural gas. You could also use it for hydrogen, and the generator can go between those various fuels without a problem. So we're pretty bullish on the opportunities that Carno has, but it is still a technology that's in development, and so that's why you know, we are including the fuel cell as well. One other thing just to highlight is you know, around the certification. So you know, one of the questions for a long time has been, even with the ERX, are we going to be kind of pulled into the government mandates that are out there, ACF, ACT, IRA, and we're seeing probably across all of our product portfolio, the ERX, the Carno, and the fuel cell, that all three of those are going to be pulled in. And one thing to highlight there is just recently there's been a lot of discussion around ACF, which is the mandate that's in draft format by CARB. So little color on ACF, fleets have been actually pushing back on CARB, saying they're looking for exemptions from ACF and that they don't need to adopt vehicles till later on than what CARB is proposing. One of the exciting things for us is recently CARB had a call where they reiterated and expressed that if a near zero emission vehicle that has the correct performance characteristics is available, they're not going to grant fleets extensions for not being able to get infrastructure, not having vehicles available, because CARB is viewing it and saying that near zero emission vehicle is good enough, you know, is good that they should be adopting, so they're not going to get an exemption. So that's a huge win for us because now you know, fleets will be, you know, kind of forced into adopting a near zero emission vehicle, even if a BEV vehicle isn't available. And obviously, you know, we're one of those vehicles, and they could adopt us during that time or long term and still get the same credits. So long-winded answer there, but wanted to touch on a couple of points for you.
No, got it. That makes a lot of sense. Appreciate the time. Thanks.
And there are no further questions at this time. Mr. Thomas Healy, I turn the call back over to you for some final closing remarks.
Terrific. Well, we appreciate everyone joining the call today. A lot of exciting news. You know, we're excited about the announcement today around the demo vehicle with Hyliion. And we encourage everyone that is interested to please either attend the ACT Expo that's happening in early May. We're going to be showcasing a lot with the ERX as well as the Carno. Or if you're interested in as well, please join us for our investor conference, which will be happening at our headquarters on June 27th. We expect to be able to really showcase a lot of what we're doing live during that investor meeting. So appreciate everyone taking the time, and we look forward to chatting again next quarter.
This concludes today's conference call. Thank you for your participation. You may now disconnect.